Okay bro, after some time, welcome to the new video. Today we will analyze this stock with the name of Realty Income Corporation and the ticker O. And the reason why we will analyze it is because tomorrow they have ex-dividend date, and additionally they have 36% of price return over 10 years, which is amazing. That basically means if you would invest in the stock here, you would have right now here 36% return, but they have 3% CAGR, which means that if you would buy this stock each month, let's say, all together, you would have 3% growth, which is not perfect, but fine. And additionally, they have monthly dividend with quite high dividend yield of 5%. And for the United States stock, they are quite cheap and they are trading at $55.34. And additionally, they are quite old company. They are on the market for 54 years, which is perfect. And as you can see here, they are actually paying the monthly dividends, and we want that so that our rent can be paid, you know. I'm joking a bit, bro, but you know what I mean. And if you go here to financials, you will see that all the data that we need is here, but with the free plan, we cannot copy it into the Excel, which is why I will use this website called Macrotrends. Both websites, you know, Ticker Terminal, which is for stock research, and Macrotrends are going to be linked in the description, so feel free to take a look. And here you go to Financials tab, and then you will use income statement, balance sheet, and cash flow statement. Obviously, here we don't need all the data, so I've kind of filtered it into this Excel, as you can see here, and we will go through the most important topics, yeah? And additionally, bro, if you want to see the full guide, how I analyze and find stocks, I will link right now the video, then if you are interested, go take a look. Okay, here we have 7 subtopics that we are going to analyze in income statement, which are basically total revenue, gross profit, gross margin, operating income, net income margin, and capital expenditure, and net income. So let's go straight to it. So basically total revenue is growing through the 10 years. You want to have 10 years because this will give the better overall view of the company, and 10 years growth is amazing. So I will put the green light here. And then gross profit is, okay, I don't have it here, but we can see that it's rising. It's perfect. And then gross margin is gross profit divided by total revenue, okay? And you want this to be more than 60%, and here it's around 90, which is outstanding. I have not seen that anywhere, bro. It's crazy. And then operating income and net income are quite similar, as you can see, and they are growing through the years, which is amazing, except here a bit. In 2020 and 21 they fell, probably due to Corona. Net income green as well, perfect. And then net income margin is net income divided by total revenue, and you want it to be more than 20%, which is marked here with orange. And as we can see, this company is good, except here in 2021 where something probably happened, but for that we need to take a look at annual report, and I will make a video how to analyze that as well, so don't worry. And in terms of capital expenditure and net income, we can see that this percentage, this ratio is growing, which is okay as well. And then we go further to the balance sheet. Here we have 6 topics that we will analyze. So long-term debt, retained earnings, total equity, return on equity, total liabilities, and debt to equity in percentage. And here I use the most important graphics. So basically long-term debt is growing, which is very bad sign, so this is a red flag. Then retained earnings mean how much money the company invests back into the business instead of paying it to the shareholders, okay? And you want this to be growing through the years, which means that the company is investing more and more money instead of paying it to the shareholders, which is great. Total equity is basically how much cash they have, and as we can see, it's growing through the years, which is more than perfect. Return on equity means, what is the profit how much return on investment, basically, how much money they get, based on the investments. And as you can see, they have around 4%, which is not perfect, because perfect it would be around at least more than 5, bro. So I will put a red flag here. Total liabilities, bro, this is all the debts that they have basically and all the costs. They are growing as well through the years, which is a bad sign. And debt to equity means like basically how high is the debt in terms of how much money they have, okay? And ideally you would want this to be below 50. And here we can see that it's around 80, 90, 70, which is horrible, which is why they get a red flag for that as well. But as you can see, the total debt and equity the ratio is going lower and lower, which means that they have less debt right now as they had in previous years. It's a great sign, but still we are not happy with that, yeah? And in the cash flow statement, we only have capital expenditure, and that means how much money they invest in, let's say, new buildings, new computers, like new equipment, how much they reinvest back into the business, basically. And you want this to be as high as possible. And as you can see, they're reinvesting it massively, like literally tons of money in the last 2 years, which we will give a green flag, sorry. And that investment back into the business could explain why they have such a high debt here in those 2 years, because it makes quite sense, And basically, let's take a look right now if this stock is a buy stock or sell stock. And income statement is perfect, so I will mark that with green. Just let me see that. Balance sheet is horrible. It's not horrible, but it's bad, bro. They need a bit of work on that, so that's cool. And the cash flow statement is a solid green, so this is a green one. And bro, my final thought is that you should buy this stock. Buy it now, because it's relatively cheap. They have monthly dividends. They are a healthy business which is on the market for quite a long time, 50 years. It's quite good, to be honest, because they survived at least 2 crises. They survived 2008 crisis and Corona crisis, which is perfect, I guess. No, not I guess, which is perfect. So yeah, just buy it, bro. My final thought is to buy it. I'm confident in it, and let's get those dividends, bro. You know what to do now. Take care, do the hard work, and see you on top of the world.